Welcome to Financial Repression Authority's Roundtable Insight, where the best fund managers, economists, and industry leaders discuss the key investment issues and challenges in the current macroeconomic environment.
Hi, welcome to FRA's Roundtable Insight. This is Richard Bernoulli. Today we have Judd Hirschberg back on the program show. Judd is president at White Wave Trading, a trading company and our partner for trading research consulting services at Cedar Gold. He has run proprietary trading groups, has over 45 years of trading experience. He's developed some awesome indicators and a repeatable process-based approach for trading the financial markets. Prior podcasts with Judd have focused on his approach and methodology and also updates on the financial markets. Today we'd like to understand what Judd is currently seeing in the financial markets across asset classes and jurisdictions. Welcome, Judd.
Thank you, Richard. It's a pleasure to be back. I love all your podcasts. They're wonderful.
Thank you so much. I thought we'd begin with a view on your S&P 500 index perspective, where you think the index is going and potential target numbers.
Okay. Just to review, my whole methodology is price to price. So I create a template of price and the numbers are very far apart. And I'm looking for prices to go from one level to the next level. And that's how we trade. Right now, I'm expecting that the S&Ps, by making a new low on the week, are going to give us a target of 4187. And that's just the next target I'm looking for. Eventually, they could, go lower than that. But for in the meantime, that's what I'm looking for. I'm looking for 4187 in the S&Ps, and I'm looking for just under 13,000 in the NASDAQ.
Is there a general time frame target for that as well, or hard to say?
I'm not interested in time. I'm interested in, it's not time in the trade, it's distance traveled with me. Yep. So I don't care if it takes a day, or it takes a week, or it takes 6 months.
Okay.
It's just the next level. So I don't generally time it. My timing comes off of different scenarios and when capital flows, the end of quarter flows. Like last month, we had a few weeks that we knew were going to be positive, the indices. We had a 400-point rally in the S&Ps, and then they ran out of steam. And everybody, started selling big rallies last week. And it was really the NASDAQ that caught the high in the market. Because I had a 12,270 target from mid-March for the NASDAQ, and it missed it by 2 points, 1.25 points. So in the NASDAQ, that's basically hitting it. I usually give the NASDAQ, 8 to 10 points of tolerance on any one of these big levels. So they basically traded it. And then we had a retest last week, and we've been coming down ever since. Now I'm looking for the NASDAQ to go, well, it'll bounce off this weekly Imaku line, but I'm looking for just below 13,000 for a full swing.
Mm-hmm. Would it be fair to say you're most bearish on the NASDAQ index versus the S&P versus the Russell?
Yes, the Russell actually, we had a conversation about the last couple of days, because I don't think that's the wrong index to be shorting because of its energy composition.
Yeah.
So people that want to sell it for because of financials, it's not the financials that you're fighting. It's the energy companies like Next Tier, Peabody Coal. You have Intrepid Potash in there. There's some LNG names. There's other petroleum names, Range Resources. So that's just the wrong one. So everybody's been buying the Russell and selling S&Ps or selling NASDAQ. So it's long S&P, short NASDAQ. And it's long S&Ps or short S&Ps, short NASDAQ, long Russell.
Yep.
And part of it is just with the NASDAQ is just the rates. It's the long end of the curve.
Mm-hmm. Interesting. And can we move to the bond market? You had a couple of charts, one for the euro, one for the 30-year, to show, and you wanted to describe the Plaza Accord swings in the currencies and the bonds. Yeah.
All right. So here's the 30-year futures going back to when the futures first started in January 77. Most people can't pull up this chart because they're looking at the Globex futures, and you're not gonna, oops, this is the wrong chart, guys. Hold on. There we go. That's it. That's the correct high right there.
Mm-hmm.
So we're into our first Plaza Accord fib in the 30-year futures. And they have a little bit more to go, but this is a huge inflection area down here. And if they don't find footing here, this channel line has been holding since 1985, since the Plaza Accord.
Yep, that's a long time, yeah.
Yeah, it's a long time. So that in yield, and I'll bring up the yield chart so you can see it in yield. This is the same chart, only that's the 30-year yield from the Plaza Accord. That's the 08 sell-off, 2020 sell-off. And you can see by this green line, that's basically a balance line where that's a 50% level. So we're coming into this area where the bonds are going to make up their minds whether they're going to have a whole new leg up. There's going to be another leg up in yield, which could take it to about 330 in the long end. And that's going to cause a lot of havoc in the NASDAQ and in the currencies.
Yeah. And did you want to show on the euro bond?
All right. Yeah. So on that theme, we're looking at, basically how interest rates, might affect what's going on with the dollar. And as the rates have been inching higher, the yen's been breaking. The euro is at the half of the life of the Plaza Accord. That is no small level. This is his 2016, 2017 low. But if we start spending any time under 108 and a quarter, I think we're going to come down, 4 or 5%, and then it's going to get real interesting because the Fed's going to have a big problem with the currencies.
Yeah.
And
Yeah, because that could
just to
drive
give you an idea of dollar yen,
US dollar higher. Yeah.
you know, here's the Plaza Accord swing. And just, you know, just the first fib is the 147. You know, that's not even life of yen. And we've been going sideways in the yen for a couple of decades.
Yeah.
You know, this is where you know, this was 98 was a big intervention year in October when the yen when they caught every hedge fund in the world long dollar yen in the low 130s, and we went back to parity. This is going to be real interesting because I think we're going back to that 98 Clinton Federal Reserve intervention around 130 and change, 132.
Uh-huh. Interesting. And can we move into the metals, like perhaps look at copper, platinum, gold, silver?
Sure. We're going to look at gold two different ways, or a couple of different ways. First of all, this is gold against the 30-year futures. And then this is just starting to break out. This is a major breakout against the interest rates. So as the yields are going higher, it would seem counterintuitive, but the gold's breaking out against yields.
Yeah.
And if you just look at a gold in yield, that's 1980 when gold topped at $880.
Mm-hmm.
And you can see where it bottomed in January of 20.
Yeah.
This can go a lot higher. So, you know, this is your friend Ira 101. We're looking for the relationships to see what's moving and how it's moving. The biggest movement right now is hold on. And we've been talking about this for about 6 months in the room. Is one of the guys in the room. This is his favorite trade. This is gold denominated in yen.
Mm-hmm.
So that's the 1980 high. Down to the 98 low, 99 low.
Yeah.
This has got a long ways to go. This spread's going to come up into here. So another, you know, it's got 10, 20% to go.
Mm-hmm.
So the gold looks the best against the yen, and the gold looks, the gold still looks great against the euro.
Yeah.
Let me just pull that up so you can see it. This is gold denominated in euros. So this is going back to the highs and farther. So it's just a matter, we use these gold currency spreads and the gold bond spreads to try to give us an edge to get long gold.
Yeah.
And trade it.
Mm-hmm. Interesting. And do the silver charts exhibit similar behavior against those currencies also?
Let me just take a quick look, because I haven't. Well, silver, all these, the silver doesn't look as good as the gold,
Mm-hmm.
but it just depends. It doesn't look as good against the yuan. It doesn't look as good against the euro. As far as silver and yield, it looks great.
I see.
Silver against the copper, and gold against the copper, I can't get a readout on that. At least, it's not doing anything that would entice me to do a trade. I think the better trades right now are all off the bonds.
Okay.
It's the whole board's an interest rate differential trade right now.
Yeah. And what about on the industrial metals like copper and platinum, sort of both?
Well, platinum had a pretty good low the other day, but it's still gold that's running it. It's not platinum. Platinum has its moments, but you have to you have to trade it.
Yeah.
Let me just see if I can. Where is it? Oh, you've seen my screens, Richard. I have so much stuff up. It's hard to.
Yeah.
It's still today again. It was long gold, short platinum.
Yeah.
So we're back to the spreads. And it's which spread gives you an edge.
Mm-hmm.
So it's gold yen, gold and yuan. Let me see what the gold platinum looks like. Yeah, hold on. And the gold platinum is in a bullish phase. So it's the gold's the one.
Mm-hmm.
And and it's pretty rich here. Let me just take a quick look. I have to change these inputs. This is trying to make, this is coming back to the old, these 2020 highs again.
Yeah.
So it's still gold that's leading.
Interesting. Any trends for copper that are showing, or?
Copper looks okay. If it stays above 4.5, it maintains momentum.
Mm-hmm.
And copper just hasn't been, as sexy. I mean, I get the whole thing that I think copper's just consolidating up here.
Mm-hmm.
So I think you want to focus, you just want to have an alert around 4.5. Starts getting back under 4.5, then something else is going on.
Mm-hmm.
And I'm really just looking at these, this goes back to 2011.
Wow.
The other commodities that's going, and it's still going to go, is Nat Gas.
Yeah, let's take a look at that. Yeah.
And the hold on, let me get the right. This bar is when gold or oil inverted. Okay, so this is long oil, short Nat Gas.
Okay.
And you've been getting some pretty good trades off of this. Here, March 9th.
Mm-hmm.
Let me just go back to the right input because I want a little bit more granularity. And again, here on March 24th, that's when the oil really gave it up.
Oh, yeah.
So what we're doing now, and this is based off of your one of your last podcasts. We're measuring everything off of February 25th right now. So we have two big measurements to use. You want to see where things are in relation to the Plaza Accord and where they are in relationship to February 25th, when we basically blew up the SWIFT system.
You're referring to the peg of the Swiss franc?
Right.
Mm-hmm.
So you're getting trades in the oil. The oil itself, I had a number, and I didn't think we were going to get there anytime. I mean, I've been telling guys for 10 years, if we ever got to 116.5 to sell the oil, you'll get at least $10 out of it. And the night it went there, the first time, it went to what, 116.53 and broke $9.
Yeah.
The high was a number from 2008. So that was the high of a delivery in 2008, where they squeezed all the shorts because there was a squeeze on the tankers and storage. And late in the day, they ran the oil up another $8 because people couldn't take delivery because they didn't have any place to put it.
Mm-hmm.
And then the next morning it gapped lower and it never saw that was a decade high. So, a big part of what we do are relationship trades and event trades. And we like to mark the dates and keep track of them.
Yeah. Are you bullish more on natural gas or both natural gas and crude oil?
I think Nat Gas looks better than crude oil.
Yeah.
I can't tell if crude stopped or not. I think it's going to have to take out that yesterday's low for it to weaken. And in the meantime, I think it's a big political football back and forth. And I think you just have to trade it.
Yeah.
Nat Gas, I think structurally, there are a lot of fundamental reasons why there's going to be demand for that. And I think that's going to be the better long. but at least longer term. But the whole area in the Nat Gas in the upper sixes, $6 range, going back to January 03, 05, 08. There's and even before in 2000 and 2001, there's a lot of congestion on my work in this area.
I see. Yeah. Okay, interesting. And can we take a look also at other energy like uranium, maybe using the Sprott Trust as a
Yeah, I think the uranium, the Sprott Uranium Trust looks great. So you want to buy this on breaks too. So if you get $1 break, I'd look to buy it.
great. And let's
See
say
what else we like. And here's the here's the uranium X ETF. I'm not sure what's in it, but this has been trading fairly well.
Mhm.
And every time it gets down into the averages, it just stops. So if you look at this for life of uranium, I mean, if you think uranium's good, someday it's going back here. That's kind of hard to believe, right? To 104.
yeah, wow.
I'm not saying how it's going to get from A to B, but that's the possible target right there.
Yep.
So yeah, there's potential there.
Mm-hmm. And coal has been going through the roof lately.
Yeah, I can't pull up a coal chart, but hold on. But Peabody's been a great surrogate for coal.
Yeah.
And I've been talking about this for a while.
Yeah.
Since and here again, let me go to the right day. Right there, February 25th. That's the day that Russia invaded Ukraine. That's why we're measuring all the gold currency spreads,
On that date. Yeah.
all the bond spreads, everything off of the 25th.
Yeah.
And you can see where Peabody Energy bottomed that day and has been going up ever since.
Yeah. Interesting.
Camco, same thing. There's a 24th, put in a very bullish formation, retested in the morning and took off. One time back, it gave you one chance on March 4th to buy it, and it's been in an uptrend ever since.
For the uranium.
Right. Ira's favorite grain name for the last
Yes.
2 years is Bungie. You know, Bungie wants to go to 135. And then we'll see what it does. All the, Intrepid Potash, that's just a huge breakout. And all those names all took off on the same day. They all took off February 25th.
Wow.
Everything.
Yeah.
Here's Intrepid Potash, February 25th. It's doubled. So February 25th should remain in everybody's minds, because if you're going to measure any type of place on a pullback to get in, you want to measure it off of February 25th. And that's, that whole podcast you had with Zoltan and Ira. It all goes back to that day.
Bretton Woods 3.
Right. Bretton Woods 3.
Yeah.
So every chart that you're going to look at, if you're going to look at the agri names, you're going to look at the Nat Gas names, fertilizer plays.
Yeah.
Everyone's going to show a bottom basically on February 25th.
Mm-hmm. And what about for agricultural commodities like in the grains?
Same trade. Here we are, February 25th. This is, nope, sorry, wrong one. Let me get that up there. Where did that go? There we go. Okay.
Kansas City wheat. Yeah.
Kansas City wheat. February 23rd, February 25th, it had a really negative reaction to the news, right into this purple line, which is momentum. So when I look at something like this, I look at this move, I don't trust it. I think it's an anomaly. I'd never take a signal like that. And the next morning it opened up higher and we went straight up.
Wow, yeah.
The wheat's not done. Now, if you look at this is May wheat, and July's now front month. We're going to come up and at some point and trade back around $12.35. It's just going to be hard in here.
That's it.
But every chart is the same. And it's this Kansas City hard red wheat, the winter wheat, that's what they have in that's the wheat that they plant in Ukraine.
Yeah, that's the most similar, yeah. Versus like the Chicago wheat, right?
Yeah, the Chicago wheat doesn't, the Chicago wheat went up to what? $14. I mean, they really took that one up. But again, it's the same deal where where was it? Yeah, that's the 25th right there. And then it took off. And right now, I think that this is a different type of wheat.
Yep.
And the beans, the beans are going to be more of and the corn even though the corn's strong, and they had that ethanol news today
Oh, yeah.
about going to back to
Yeah.
allowing the winter blend to be produced this summer, so there's more ethanol in the fuel,
Yeah.
and it's cheaper. So they're gonna one more cosmetic lipstick on a pig routine to bring down oil prices. But
Yeah.
This is going to be a U.S. trade, a weather trade this summer.
Mm-hmm.
And we have drought or we have bad planting in North America, the grain products are going to go crazy.
Interesting. And also a final question on the use of names. Like you frequently look at Tesla or Apple, other types of such equities as a tool, right? As a technical analysis tool. Can you illustrate a little
Sure.
bit of that in the analysis, how you approach like the equity markets, for example?
All right. So I spend my mornings when I get up in the morning, and for a big part of the day, I always look at seeing there's always one or two names that have an outsized effect on the indices on any given day. And lately it's been Tesla. And the first time we came down, here, let me put up. Hold on. So you can see what I'm talking about. So a lot of times you can take a look at the NASDAQ and it'll line up with one of these big cap names. And we've been following, the NASDAQ's been following Tesla lower. And every time that, like this morning, I needed a 14,300 print. To put a reversal back up on this point and figure and put in a bottoming formation.
Yeah.
And Tesla didn't hold and couldn't get high enough. And the indices missed, the NASDAQ missed it by 20 points. And when that happened, you know, at the same time, the S&Ps went right to one of my numbers and proceeded to break, 60 points to the next number. So, sometimes it's, it could be Amazon, it could be Apple, it could be Google. It just depends upon what the flavor of the week is. It's rarely an energy name. It's generally one of these big cap tech names that line up with the indices. So I always keep an eye out for it just to look and match up highs and lows. And you can do the same thing with the transports, if you want to break down the names and really get into that. But it's just one more tool that you can use.
Yeah.
And this is, let me just open this up because we didn't do this earlier. This is a channel line, a rough channel line in the euro. This high in the euro is 123.5. I think that was in 2017. when Ira was doing a roundtable with Santelli, everybody thought he was crazy.
Okay, yeah.
It went right there and turned around and faded again. There's room to come down a lot farther. So that's why, I like to look at these just to give myself a little context as to what is going on with an instrument. Mm-hmm. So the more I can analyze it in different ways, you don't want to overanalyze things, but you're just looking for a relationship edge. And you just don't want to do something that's against the direction.
Mm-hmm. Interesting.
So I'm looking, basically, I think the next couple of months are going to be really busy. I think we're going to continue to have these big ranges. It's going to be a trade. I think we're going to go down to that July 2021 low again, around just below 4,200 in the S&Ps. And, if we start sustaining below that, I think we're going to take a whole new swing down, and a lot bigger than a lot of people think. Yeah. And that's the economic story that remains to play out. I mean, for me, as a trader, I try not to focus on it. That's Ira's edge, really understanding it and then translating that into an effective money-making strategy.
Yeah. And just final thoughts on that is that view or perspective, potential trend, basically a continuation of the February 25th time? Like, are there any geopolitical factors that could change if peace breaks out and Russia?
Oh, it'd have to be peace. And how long would Russia have to play nice before they let them back into the sandbox?
Right. Okay. Yeah.
I don't know those answers. That's why I'm happy just to keep my analysis from A to B.
Yep.
Versus what if, because if you made the assessment over here in February or March that our economy was slowing down, and a lot of people have that opinion, well, you got run over for 400 points straight up in the S&Ps.
Yeah.
I don't, as long as they hold one of my numbers, it's going to the next one. That's all I care about.
Yeah.
It's just mentally easier.
Yeah.
And it's a more of, in the, I call them matrix sheets. It gives you a template for risk management.
Yeah.
So once it goes above one of the numbers on the sheet, it's no longer profitable to remain short. So either you close your shorts out, and or you can get long and trade against the level, expecting it to go to the next one, and they always go to the next number. They've been doing it for 60 years across all asset classes. It's not about the change now, and it's never different. No matter what anybody says.
Yeah, that's the power of technical analysis. Yeah.
Well, I'm following different studies. It's just not, I rarely look at Fibonacci unless it's on a very big swing or over a very long time frame. I don't look at any short-term Fibonacci work at all. I think it's bad. All it's going to do is give you an incorrect level to try to trade. the price templates that I put out, and you've seen them work time and time and time again.
Yeah.
You know, one of the guys in the room today made, 104 points trading from one level to the next and back again.
Yeah.
It's when you want to be up and when you want to play.
Mm-hmm. Well, great. Yeah, it's been a fascinating discussion, very insightful. How can our listeners learn more about your work?
You can go to whitewavetradingstrategies.com. And on my website, you can just put in your name and email, and you can get a complimentary 1 month trial of my service. And along with that, you get an invitation, a daily invitation to my trading room, Judd's room, and you can come in and listen to the conversation.
Yeah, and those conversations are absolutely fascinating. I can vouch, very insightful at the economic level, financial level.
And when Ira and Andrew and Angela and everybody starts talking about macroeconomics, and then we try to break it down into a trade.
Yep.
So, Richard, thanks again. I mean, this has been fabulous. I love all the work you've been doing on FRA.
Okay,
it's been incredible.
Yeah.
The FRA Roundtable Insight Show is for informational and educational purposes only and should not be considered as a solicitation or offer to purchase or sell any securities. The investments, investment strategies, and investment philosophies discussed or presented on the show each involve their own unique risk factors which are not discussed on the show. Any discussions among the panel participants or responses to listener inquiries are based on the personal opinions of the panel participants and do not take into consideration the listener's suitability, objectives, or risk tolerance. Please be advised that you invest or speculate at your own risk.